Good evening, friends. Tax Audit Quality Review Board, which is entrusted with the responsibility of reviewing tax audit reports, which are furnished by our professional brothers and sisters. Good evening, friends. To enhance the quality of Tax Audit Quality Review Board, also to point out, which is entrusted with the responsibility of reviewing tax audit reports, which are furnished by our professional brothers and sisters. Review Board, that there should be error-free reporting. We are finding that of late government agencies, including Central Board of Direct Taxes, are becoming more and more aggressive for the errors, and they are reporting those errors to the institute. It is necessary that we tighten up our belts, and whatever our reporting is there, that is error-free. I am sure that this month we'll see all the tax audit reports being furnished, because as you are aware, last year when myself and Dr. Raj Chawla were on Direct Taxation Committee, we have written to the Central Board of Direct Taxes that hereafter ICI will not apply for any extension. And that is, you will appreciate in long-term interest of the professionals. So last year we have seen that we never applied for extension. All the work was completed within time. And whenever work extends beyond time, ultimately the penalties and other unpleasantries have to be faced by the clients. And they become more vigilant, and maybe this year they will become more prompt. With that view in mind, we wrote that to CBDT. That was also appreciated by Finance Secretary when President had a meeting with him. This year also, we believe that the Direct Taxes Committee will not apply for any extension. So we have to complete all the tax audits within the given time limit. That does not mean that if the tax audits received in last week, still you complete somehow. You have to apply all the principles which are laid down in guidance note for tax audit and for accounting standards, auditing standards. Then only you will be doing it appropriately. If you feel that this job cannot be done appropriately, maybe one should be bold in refusing the assignments which are coming at the 11th hour. At the meeting held of the council on 13, 14 and 15th August 2023, the tax audit guidance note, which was modified by the Direct Taxes Committee, has been approved by the council, and maybe by Monday or Tuesday, we expect that this guidance note will be available at least virtually on the website of the Direct Taxation Committee. Similarly, in case of charitable institutions also, guide has been prepared by Direct Taxation Committee. As far as TAQRB is concerned, we have also released quick referencer to tax audit in the month of August itself, and that is available in our website. Maybe sometime at the end, we will also reflect the cover page of our this particular quick referencer, and now also it is available on website. So friends, when we talk of error-free and tax audit report, we also should know what errors have been noticed by Tax Audit Quality Review Board while examining several tax audit reports over the years. So that compilation we have made, and these errors we will pointed the manner in which the erroneous reporting was made and how that reporting should have been in an appropriate manner. And we have two stalwarts to address this particular issue with us. We also have with us Chairman of TAQRB, CA Dr. Raj Chawla. So with these opening remarks, now I hand over to the Chairman, CA Raj Chawla, who is also in Pune today, to offer his welcome address.
Thank you, Chitra sir. Good evening to all. My dear fellow colleagues, I welcome you all in our 12th session of the series of webinar on tax audit. As you all know that TAQRB bring out this series of webinar in helping and guiding the members for enhancing and improving the quality of tax audit. As you all are aware, tax audit plays a vital role in ensuring compliances with tax law and regulations. In today's session, we would highlight some of the common issues that we face during the tax audit and the way to address them. Now I extend my warmest welcome to CA Sachin Sinha ji and CA Deepak Bolusaria ji, our session speakers, and CA Jatin Tagra ji, our session moderator for today's webinar. I express my gratitude for their willingness to share their expertise with us. Now, without any further delay, I would like to invite CA Jatin Tagra ji to take over the session. Thank you.
Thank you, and good evening, Chairman sir, and Vice Chairman sir, and my fellow professionals and distinguished colleagues and member of TAQRB. I CA Jatin Tagra, and it's an absolute privilege to welcome you all to the significant webinar hosted by TAQRB today. We gather to shed light on a subject that lies at the heart of our profession, common issues in tax audit under Section 44AB. Before we delve into the intricacies of this vital topic, I would like to take a moment to express my sincere gratitude CA Dr. Raj Chawla ji, Chairman, and Chitle sir, Vice Chairman, for gracing us with his presence. His leadership and dedication to chartered accountancy profession have been a guiding light for many of us, and we are deeply honored to have them with us today. As we all know, Section 44AB of the Income Tax Act is cornerstone of the tax compliance, and understanding its nuances is crucial for every practicing chartered accountant. In today's session, we will explore the common challenges, best practices, and recent development in tax audit under this section. Our goal is not only to enhance our technical knowledge, but also to ensure that we uphold highest standard of professionalism in our role as tax auditor. I have had the privilege of serving the profession for 13 years, and I have witnessed firsthand the evolving landscape of the tax compliance. It is my sincere hope that this webinar will provide you with valuable insight and practical solution that you can apply in your practice. Throughout the session, I encourage active participation. Please feel free to ask questions, share your experience, and engage in discussion during the designated Q&A session. Your contribution will enrich our collective understanding and make this webinar impactful. So, with gratitude in our heart and a commitment to excellence, let us begin the exploration of common issue in tax audit under Section 44AB. Together, we navigate the complexity of this subject and emerge better equipped to serve our profession and the nation. To begin with, I would like to welcome Sachin Sinha ji, CA Sachin Sinha ji. With 2 decades of experience, Mr. Sinha is a highly accomplished chartered accountant and founder partner of Prakash Sachin and Company, Chartered Accountant. His expertise spans domestic and international taxation, management consultancy, advisory, litigation, and commercial issues. He is also a prolific educator, having delivered over 400 seminars and webinars on taxation topic and authored books for ICAI. With active involvement in professional committees, study group, and as a visiting faculty, Mr. Sinha is a leading authority in the field of taxation and international fiscal matters. Welcome, sir. Now, I would like to invite our second speaker, Mr. CA Deepak Bolusaria ji. Bolusaria ji, with over 24 years of experience, a tech-savvy chartered accountant. He is partner at DAK SM and Company LLP and a fellow member of ICI, known as the IT man in North India's Chartered Accountant Circle. Mr. Bolusaria is a prolific YouTuber and a member of Major Tax, Major Tax and CA Association. He brings vast expertise in tax audit, having completed various ICI certificate courses and currently pursuing additional certificates. As a member of TAQRB and Tender Monitoring Directorate of ICI, he is committed to enhancing tax-related services and compliances. His innovative use of technology and industry experience makes him a sought-after figure in chartered accountancy. Welcome, sir. Now, I would like to request Sachin sir to begin with his session. Thank you, sir.
Thank you, Jatin sir. Good evening, and thank you so much for a nice introduction. First of all, I'd like to say thank you to our Honorable Chairman, Sri Raj Chawla sir, and Vice Chairman, CA Chitle sir, of the Tax Audit Quality Review Board. And my co-author, Deepak sir, has guided me how to proceed throughout the session. So we have divided the session accordingly. So my part is to cover the issues, the challenges, what while filing the tax audit return or while preparing the tax audit return. There are so many issues, or we can say the general mistake which we sometimes did not realize that we are doing doing or committing such type of mistake, and we do so. So my idea is to highlight those points, and then we will discuss on that part. So it's hardly at 15 page slide, and I'll try to cover within the given time frame, that is around 50 minutes. So please allow me to share my screen, sir. Is it visible?
Sachin bhai, this is visible. Now please continue.
Okay, sir. Thank you.
Yeah.
Okay. So since this program is being organized by TAQRB, so this is my idea is to discuss the quality audit, about the quality audit, and what are the general mistakes we generally do while doing such type of audits. So I have covered these 15 points. 12 points. That is, first of all, I would like to discuss about the appointment letter, the audit plan, code of ethics, management representation letter, valuation of stock, fair market value, auditing papers or working papers, change in nature of business, tax deducted at source, reporting on GAR provisions, reporting on clause 44 provision, and physical audit report. So if you see, some of the items are taken from the Form 3CD. Form 3CD, like valuation of stock, fair market value, auditing papers, change in nature of business, tax deducted at source, GAR 44. They are all from part of Form 3CD. Rest is not from Form 3CD, but related to the audit aspect. So that's why we call this a tax audit. So not only the taxation we need to cover, we need to apply the audit acumen also. So appointment letter, which is most important and the beginning point of any assignment while doing the tax audit. So let's take a simple example. I've been appointed as a statutory auditor of one company, and I received the appointment letter from the company that you have been appointed as statutory auditor for the financial year 22-23, and the tax audit is also applicable in that company. I did not ask to the company for issuing a letter for the tax audit for tax audit appointment also. We presume or assume that whatever appointment letter has been given to us as a statutory auditor, it also covers other assignment also, like tax audit, transfer pricing audit, etc. However, technically speaking, the appointment letter which is given to you, if it is related only to the statutory audit, please tell your client to issue the appointment letter for tax audit also. This is related to the corporate SSC. Assuming the non-corporate SSC, so that the individual or a firm came to you, they approached to you, and their turnover is the tax rate is applicable on them. They are not liable to get their books of accounts audited in any other law. They approached to you, you said, okay, no issue, I'll do the audit, and you completed the audit without asking for any appointment letter. Please note that this is a serious mistake. Audit report, an appointment letter should be obtained before starting the audit, and this should contain the scope, the basic scopes of the audit also. So audit plan, of course, we have during the articleship time we trying to understand what is audit plan, and while doing the audit, either it's a statutory audit or a tax audit or any internal audit also, we start with the audit plan and then start our working. So audit plan is the key of working any work in the efficient manner. So this is very important to understand your client. So know your client is the basic thing. Understand your client, understand the business model of the client, and then start working on it. Prepare a plan. How much time it will take, what are the documents you will ask for, what are the law which is applicable to them, what are the documents client maintaining, where are the branches, how many branches are there. So everything, just try to understand, go do the deep dive while preparing the audit plan, because if you prepare an audit plan accurately, or we can say exhaustive audit plan, then it can be said that your half work has been done before starting the work even. So a best audit, if you have excellent audit plan, prepare an excellent audit plan, discuss with your team, and then start the audit. And it is also important to share these audit plans with your client also, so that they can also understand that how much time you will devoting here, how many team members will be here, what are the documents you'll ask, so that everything should be flow to you as per your plan. Code of ethics, this is also very important, and we have been learning since our final days of CA that these are the etiquette, or these are the ethics which we need to maintain while dealing with our co-professional or any other authority. So while taking an assignment for tax audit, and it is being earlier it was being done by some other auditor, and now it has come to you. So it is your responsibility to ask for the letter from the previous or outgoing auditor, that he has no objection, or if he has any other point he want to discuss with you or he want to share with you, please offer them for those information also, so that before starting the work, when you contact to your predecessor, you will be able to understand what are actually going on in the company or in the audit in the organization. Apart from this, sometimes we do the mistake that when we take the audit, statutory audit, we do this compliance, the exchange of information or exchange of letter with the predecessor. From the same firm, we are taking the tax audit, and we are not doing such compliance. We assume that we have already done this, so it is a tax audit for this tax audit purpose. It is not required. Since a two separate assignment which is being done by the same firm, it is always advisable to ask for the write a letter, two separate set of letter to the firm, to the outgoing chartered accountant or the auditor for auditing firm, and then ask for the information, if any, which is having with them. Management representation letter. Sometime when we do the audit, we assume or presume that whatever information we are not able to obtain, or during the audit which we are not able to verify, ask for the management representation letter, and if they cover those points in that letter, we assume that my audit part is done, or I have discharged my responsibility of the auditor. So let me clarify here that the MRL or the management representation letter is for those part where you cannot reach to that level. So but for everything you cannot say that since you have not done that part, not audited that part, you can receive the MRL, and then you can say that my job is done. So let's take a simple example. Assuming the stocks are lying in various places, can we say that if in the MRL the company has already given me the stock detail, and they also mentioned that they are verifying the stock on the regular basis, and it is sufficient for me for the purpose of audit? To my mind, it is not sufficient, because a stock is a tangible item, and you can verify it on the basis of document. If you want to do it physically, you can do so physically also. Documents are available, or if there is any inward outward, you can verify all those documents. So it is not advisable to obtain MRL in respect of those stock. But sometimes the challenges are there, then it can be said that okay, this is sufficient for that purpose. But apart from this, if you want to know about the list of the banks the client is having, so assuming the client is saying that they have only 5 bank accounts, and your books of accounts are saying yes, there's 5 bank accounts, so you can say that I have audited the same, and I am also relying on the MRL which is given by the client, and it is matching. But if there is any other bank account which is lying in the books, or which can be traceable by the auditor, or which is not the transaction is not routing or not available to you, then it cannot be said that the MRL I have obtained, and I can say that that client has mentioned that there is 5 bank account, and I have relied on this, and I have not verified those parts. So to my mind, this is also not advisable. So MRL will apply only when you are not able to verify those transactions, or in any case you have to rely on the presentation of the management. So valuation of stock, this is again a very interesting part, because while if you see the tax audit report, the valuation of stock is the most important part. We have seen so many financial statements, majorly in case of non-corporate entities. The closing stock, in case of closing stock, it is generally in the same para, it is mentioned that as certified by the management. Under bracket, it is as mentioned that as certified by the management. Whether this as certified by the management is sufficient for the purpose of audit, or whether the auditor needs to extend their scope of verification for this purpose also, that I need to verify the stock. Number one. Number two, while verifying the stock, the physical verification or the document, through the documentation, you can understand the quantity of the stock. Now the second part is, because we generally say that the stocks are valued at the cost or market price, market value, whichever is lower. Now the challenge is, you know the cost, but how do you come to know about the market value? Or whether you have obtained any document, or whether you have conducted any exercise for the purpose of doing the verification of the market value. If you have done so, please consider it as a working paper and keep it with you, because sometimes it happens that subsequently the price fall and the company is saying that I have sold the product at the market value, which is lower than the cost. And at the same time that the auditor is saying that on the 31st March, that the stocks are valued at the cost or market value, whichever is lower, and just saying the cost price. So the difference is there, and the department can ask raise such type of query also, that how you have verified this, while you are saying that I have, it is mentioned that, because while if you see the drop down in case of closing stock, the three part, at cost, at market value, or lower of cost or market value. So if you say it's at cost, then you are discarding these two parts. So while you want to discard these two parts, whether you have tested those parts or not. If you have tested, then keep it, the working paper with you, to explain about before the management, before the income tax assessing officer, that how you have done this, if any question came subsequently. Otherwise, if you're not satisfied or you are not able to verify those parts, you have the liberty to mention the fact, or to report the same in Form 3CA Clause 3 or Form 3CB Clause 5. Second part is, while talking about the valuation of a stock, it also be considered that income computation and disclosure standard are the important document for this purpose, and the accounting standard 2. So while talking about the accounting standard 2 and ICDS 2, whether it is in reconciliation, so I'd like to mention that there's some gap in these two document, but at the same time 145 capital A and the provision of ICDS is matching. So of course the valuation of stock is to be reported in the ICDS column also, and the proper disclosure in respect of ICDS is to be given. We have seen in so many audit report, and the TAQRB has also highlighted this, that in many of the audit report, it is not being properly mentioned about the ICDS provisions. Somewhere the ICDS provision, they are not able to give the disclosure properly, or the numbers are missing. Only it is mentioned that closing stock or fair market value, whichever is lower, but whether the documentation has been properly taken or not, no fact is mentioned in this regard. At the same time, no disclosure is given in case of Form 3CA Clause 3 or Form 3CB Clause 5. So this is very important aspect, and it may change the profitability of the auditee also. So be careful while reporting the valuation of stock. Fair market value. It's again a big challenge for every professional, because while doing the tax audit, we also understand that the fair market value, because we often see in various clauses, the fair market value has to be mentioned. Like consideration for issue of shares under 5627, it says the fair market value. So if it exceeds the fair market value, or the issue price is more than the fair market value, or the fair market value. So what is fair market value? Whether you have done those exercises to obtain the fair market value or not. In case of quoted share, you can say that yes, this is the fair market value. But in case of unquoted share, because 5627B generally deals with the unquoted shares. So in case of private limited company, it is very difficult to say that this is the fair market value, which means the company has already obtained a fair valuation report from a merchant banker. So please refer those documents while mentioning the fair market value. The second point is the conversion of capital asset into stock in trade. Again, the point came whether the company or whether the SSE has converted the capital asset into stock in trade. If yes, then the fair market value on the date of conversion should be mentioned. So what is the fair market value on that date? In some cases, the fair market value is available on the record, like in case of gold transaction. In case of gold transaction, the fair market value is available. But in all cases, fair market values may not be available on the open website. Then from where such fair market value has to be obtained? While mentioning the fair market value in the 3CD report by the client, and whether you have pointed or reported any adverse or any observation on the tax audit report 3C or 3CB, also mention the source of information, the source from where you have taken this fair market value, because subsequently the department during the assessment can check, can verify and can understand the source. Otherwise, if you have taken one source, the department will take another source, and if there is any difference, the department will take the higher price and they say I will take this price. So of course that the situation will be embarrassing at that time. So it is always advisable to go with the fair market value and prepare a proper document. So from where you have taken, what are the basis? If you are relying on the work of any another person or any other professional, also mention such fact that you have relied on that. So these are the important aspect relating to fair market value. The third is the value of inventory as on the date on which it is converted into or treated as a capital. So as you know that section 28 clause 6A, which is inserted in 2018, it says that value of inventory which is converted into capital asset means section 28 says it's an income which is chargeable under the head business and profession. So of course, assuming you are dealing in a laptop or computer, so in that case you can say that this is the price prevailing on that date. But of course you must have some evidence to establish subsequently. So the client is the auditor or auditee is filling form 3CD, they have to keep all these documents with them to present before the auditor, and as an auditor you have to obtain all these documents with you as a audit record and verify that whether the information which is taken by the client or the auditee is the source is genuine or not. Whether can you rely if you do the assessment, whether can you accept those submission. If yes, then it is okay. Otherwise, you can raise your or report the same observation to the form 3C or 3CB. Audit paper or working paper. This is which I'm talking about since my second slide. So working paper or the audit paper are the most important document, because while talking about the audit is majorly known as the documentation part, which contains the permanent audit file, current audit file, and etc. And of course, as I mentioned earlier also, that know your client. So basic fact about the client has to be mentioned in the permanent file. What client is actually doing, how they are carrying on their business, what is the process of their business, what are the documents they are maintaining, and what are the document like registration document, PAN copy, or other registration with the excise, IEC, or other indirect taxes. Those all document needs to be obtained and keep it with the permanent file, and the current document has to be taken in the current file. Assuming in this year of audit, the client has added one more place of business and registered themselves under the GST, you can ask for those documents and you can keep it in the permanent file, because these documents you can use subsequently or in subsequent year also. So these are, and in the subsequent year, you can say that the audit team to refer the permanent file and the current file, and you can be able to understand about the business of the SSE, and then start the audit, and it will help you to prepare the audit plan or to modify the audit plan, which we discussed in the beginning, that the audit plan is the most important document, and based on this you can subsequently modify those. And at the time of filing of Form 3CD, 3CA, 3CB. These documents will help you to understand that whatever the information that portal is asking, you can put the information with the help of the information you have obtained from here. Change in the nature of business. So this is again taken from Form 3CD, where it says that is there any change in the nature of business during the previous year? If yes, so is there any effect of such change? If yes, then kindly mention such effect. So while talking about the change in nature of business, what is the meaning of change in nature of business? Whether change in business or change in nature of business is same thing or it's a different thing. So assuming SSC is dealing, so it's till the previous year it was dealing in the software, and since now from this year the SSC is dealing in the softwise. So can it be said that there is change in nature of business? Or earlier he was a trader, now become the wholesaler of the same product. Can it be said that there is change in the nature of business? So these are the few points I would like to highlight, but there are so many points you can take for the purpose of understanding. But the important thing is the change in nature of business is important to be mentioned, and for this you need to understand your client. And as I mentioned in the earlier slide, that know your client exercise or know your auditing exercise is the most important part. Unless you understand the business, unless of the SSC, what he was actually doing, what he is actually doing now, and is there any change? Because sometimes you won't be able to understand the client was dealing in the trading of cement and now become the wholesaler of the same company of cement. If you see the books of account, earlier also the bags of the cement bags were sold, and currently also the cement bags were sold. Of course, the number increases, the stock volume will change, and in the same line, the turnover will change. Although the margin will reduce, but the quantity of the profit will increase definitely. So why this is important? Because the department wants to understand that whatever, because if you see the GP ratio and NP ratio, we have to mention in the tax audit report also. So if the GP ratio is not changing, so they will check whether there is any change in the nature of business. If you say no, there is no change, then it is okay that there is no major change in the profit ratio also. But if there is change in nature of business and there is no profit, there is no change in profit, they would like to understand why this is so. And the vice versa, that if you want to understand, if you see that if there is any profit change in the profit ratio, but at the same time there is no change in nature of business, then of course the department will want to understand that if the business model is same, if the business is same, how the profit can shoot up substantially. So of course these are the points through which they try to catch the file for the purpose of assessment. So while mentioning the fact, please be obtain the information properly from the client. If not possible to obtain, if you can mention, you can report it as an observation. But I don't feel that if you discuss with the client, it is difficult to obtain the information. Tax deducted at source. This is also taken from Form 3CD. And this aspect is very important and interesting, because the auditor has to report that whether the tax which is applicable under Section 40, which is as per Chapter 17B, has been deducted properly or not. If the auditor, then the auditor has to verify by going each and every transaction whether the rate has been applied properly or not, whether the tax has been deducted on time or not, if deducted on time, whether deposited on time to the government account or not. So these are the points where the auditor has to report. The challenge is sometimes if you feel, if the details are not properly available, or if as an auditor, if you fail to ask such information to the auditee, then the reporting in this case may be difficult. So let's take an example, because as you know that 40A and 40AI. So 40AI and 40IA. So two different provisions are there. One is applicable to non-resident and one is applicable for resident. So it means while making payment to a resident, the tax rates are different, and while making payment to a non-resident, the TDS rates are different. Of course, the form is to be filed separately. So for this purpose, you need to verify that whatever payment has been made during the year, how many payment has been made to a non-resident, because it has been observed that in many cases, the tax has been deducted at the rate, assuming we are taking consideration of contract payment. So the tax is deducted at 2%. However, the company, the payee is a non-resident in that case. So such type of mistake can took place if you are not verify the proper document of the transaction. So supporting documents are also very important. Another issue which generally arise in this case since last 2 years is in relation to 194R. Because assuming a firm is making, assuming an entity is making, giving any benefit or perquisite, they book those expenditure in the profit and loss account as an expenditure, and they deduct the tax on while making payment towards those expenditure. But to whom the benefit is given, whether the person is carrying on any business and such transaction or such benefit is given because of such profit, because of such business, then in that case, of course, the 194R will be applicable between the company, so the payer, the SSE, and the person to whom the benefit has been given. So in that case, you have to verify that whether 194R is applicable or not, because in most of the cases, if the robust system is not available within the entity, then this type of transaction may fail to be recorded or reported. And at the same time also, the payer is not aware that this is falling under 194R, or this arises because of the business and the amount is more than 20,000 and the tax is required to be deducted. So these are the few transactions which are important while doing that, while reporting under this provision of the tax deducted at source. So reporting on GAR provision, this is again a very complex situation which is been given to the auditor to report on this, because if you see, the GAR provisions are such provisions where the department has to verify. So it means if any person who has entered into an impermissible transaction, as an auditor, how you will verify that it's an impermissible transaction? Prima facie, if you verify the transaction, generally the transactions are covered in such manner, it is not possible to identify that these are impermissible transaction under the provision of section 96. So you have to deep dive into the transaction, and then you will only understand that, okay, this is an impermissible transaction. So the moment you report on this, the client or the SSE is in suit that yes, you have entered into an impermissible transaction. But the question is whether this is the responsibility of the SSC to declare that this is my impermissible transaction, or whether this is the responsibility of the assessing officer to verify that whether this transaction is impermissible or not. Because the law says every transaction, it will be deemed or it will be presumed that this is an impermissible transaction unless it is proved otherwise. So you have to prove that this is not an impermissible transaction. Other department will always consider. But here they are saying that if you have entered into a transaction which is falling under section 96, then report those transactions. This is very difficult for the auditee to disclose in the form 3CD, and auditor to report in form 3CA, 3CB, because this situation will apply. It may so happen that the transaction took place, or the SSE entered into an agreement way back, or say let's take an example of 5 years back. But if still the transaction is continuing, then you have to report those transactions if it is falling under this. Clause 44 reporting. This is also again a much debated issue, that how to report in clause 44, because the GST provisions are applicable in this case, and if the books of accounts are maintained in that manner, then it is possible to report. Otherwise, Otherwise, it is always be difficult to report accurately all the provisions, because as you know that it says the breakup of total expenditure registered or not registered under the GST. It means so all the expenditure, whether it's a revenue expenditure or the capital expenditure, that is to be reported. Whether you have dealt with the registered entity or unregistered entity, that is to be reported. So of course, the salary, the depreciation, the bad debts is reported or not, that needs to be tested. However, the guidance note of ICI clearly says that these are not part of this expenditure, so this is not required to be reported. Now the question is whether this is to be reported in column number 2 or not, because column number 2 generally says the expenditure incurred during the year, total expenditure incurred during the year. So expenditures for, yes, so one can say that yes, bad debt is also an expenditure, or the salary is also an expenditure, although not paid or not dealt with any registered or unregistered entity, or not an entity. You are paying salary to a person. So in that case, it can be said that it is not applicable. But guidance note says in column 1, column 2, you have to mention. The third part is expenditure in respect of entities registered under GST. Then the goods or services which are exempt, then in composition scheme, and then other registered entities. Again, the situation, you need to verify each and every invoice. Then only you can say that yes, this information is correct. Because sometime I am not aware that whether these information, whether the GST return can fetch the information in such manner or not. If you want this information from the GST portal, I'm not sure that they'll also give you this in this format. But of course, here, since they are asking, and this was applicable for last year also, so now the clients are aware, they are maintaining in this manner. But this is applicable for every class of SSC, irrespective of the fact that turnover, if it is the tax rate is applicable, you have to maintain this. So of course, the resource challenges are also there. If the employee has, if the auditee has no resource for this information, then of course auditor has to apply their mind and time to get this information. And apart from this, expenditure relating to entity is not registered. So if it cannot be said that the residual amount will fall under clause 7. So again, you have to go back and check all the transaction, verify the invoices, and then you can see that not a registered entity. Now the question also arises that if it is a registered entity, as per the invoice, the GST number is mentioned, but as per the portal, it is said that it's not an active dealer. Then whether it will fall under an unregistered entity or a registered entity, because in that case you won't be able to get the credit. So whether it is this clause of 44 should be linked with the input tax credit or not, that needs to be tested. So apart from this, the physical tax audit report, because earlier days, if you see, we generally used to take the printout, the report, and we fill up on the manual basis and then sign it, stamp it, and then hand over to the client. And it is the responsibility of the client to submit it to the department. Now everything is online. So the situation may arise, we have furnished all the information on the portal or whatever software you are using. You have put all the information. The transaction is there, and based on this, the report is prepared and it is submitted to the income tax portal online. In this case, in such type of cases, generally what happened that it is not required because it is digitally signed by the SSC and by the auditor. So it is generally not required to take the printout of the report and sign. However, as per the TAQRB report, it says that these forms, that is form 3C or 3CB or 3CD, the auditor has to take the printout physically sign and stamp. Then it can be said that yes, it is signed and stamped, because the digital signature does not contain any stamp, because it's a signature which is digitally signed. So it says that it is to be take the printout, put the signature, and then put your stamp, and then hand over to the client. So this is the point what we covered, which is related to the tax audit quality review board. Apart from these other issues also, like reporting under the provision of related party of under 40A, uh, 40A, then in that case, it's the question arises that what are who are the related parties? But if it is not done and on the fair market value, or if it is not related to the business, or if it is not at the fair price, then do I need to report? Or if it is done at the fair price, then also it is required to be reported. So form says the form 3CD says this is to be reported as since you have entered the transaction, whether you have whether it is at the fair market value or not, or whether it is applicable to your business or not, it is not need to be tested. But generally seen that while if you input the information there, they pick up the information from the 3CD report to generate for demanding form in intimation 143.1. So these are the points what I covered, and I think this is all from my side. I am ready to take all the queries, if any. Jatin sir.
Yes, Sachinji, but before going to the queries, I am really appreciating your point that you have discussed. You have answered almost all the queries that I have in my mind before this session. But again, there are lots of chartered accountant who are connected with us, would like to ask so many questions to you. So I'll take question one by one.
Yes,
right?
sir.
Now, the first question is there. One fellow has asked that the audit report is required to file 1 month in advance. Earlier, this was not there. When due date is 31st of October 2023, why not they require the report before filing return? All the financial are also scanned and attached with report. Then why is the time of 1 month given for the return?
Okay. So, sir, the law says that if you refer section 44AB, it says the auditee has to get his accounts audited before the specified date and furnish on that date, on or before that date. So it means, and what is specified date? That is mentioned in the explanation of the same section, which says that is 1 month prior to the due date of filing of return under section 139(1). What is the due date of filing of return? It just says that the 31st October in case of tax audit. Now, with this question, of course, I appreciate the question which is raised that why this is not making together, because earlier what happened, the tax audit being done and then the report and the return is to be furnished at the same time. If you see, I think 2-3 years back, the challenges was so many works need to be done within at the same time. The filing of return, filing of 3CD, preparation of financial statement and signing of financial statement, obtaining from the auditor and then furnishing. It says, okay, this is the issue, let's give the gap of 30 days so that the last date burden is divided. The first part is on the auditor and the auditee to obtain the audit report, furnish it before the due date. And the second part is to file your return. So filing of return is the responsibility of the client. So the tax auditor has no role on that or till that date. So the auditor is free. Now you can do your filing with you. So I think, of course, you need to prepare all your financial statement before that date because it is to be audited by the auditor. And of course, the copy of the balance sheet, profit and loss account, and the schedule is to be attached, to be uploaded with the form 3CD also. Okay. Since this point has been raised, I would like to add one point here. If you see section 44AB, it says that get his accounts audited before the specified date. And the specified date, I mentioned that it is given in the explanation, which is 30 days, which is 1 month prior to the due date. The due date is already mentioned. So before the specified date and not on or before the specified date. Right. So if I refer to before the specified date, so specified date is 30th September. So as per my understanding, the audit report should be obtained from the auditor on or before 29th September and not on 30th September. And you can file it up to 30th September. Now the second challenge arises. as per law, there is no provision of acceptance of or rejection of the audit report by the client. But the portal allows the auditee to reject the audit report also. I don't know from where the system is allowing the auditee to reject the audit report. And if the auditor rejects the audit report, what will be the situation? If the auditor say, I'll not change anything, I have already submitted, I have already given to you, whether accept or not, it is up to you. But until they accept it, it will not be considered as final.
Right, sir. Right, sir. Right, sir. Sir, I do have so many questions. So
Yes, sir.
quickly for every question, because there are lots of questions has been raised by the chartered accountants. So again, the next question, how to verify expenses other than account paychecks?
Account paychecks. Again, as I mentioned, that there are various challenges in tax audit report, and this is one of the challenge. I forgot I mentioned in the slide, but this is again a challenge. Sometimes you will not able to verify through the bank statement also. Even if the payer and pay, if I give you the statement of payer and pay, assuming both are your client, and you want to just verify that, okay, let me check how many transactions are through through other than account paycheck, it is not possible sometimes, because the nomenclature the bankers mention in the, or I understand it's a system generated, but it is very difficult to understand that it's a account paycheck or some other than account paycheck. So again, you have to take a call on this, and you can mention in your observation that you won't be able to verify this. However, I think Deepak sir will definitely cover this point in his slide also.
Okay, sir. And the next is penalty for non-filing.
Penalty for
non-filing. Okay.
So non-filing is basically, if I mention the 271F so 271I. So 271B is the basic document. So if you see whatever the section is, but the concept is the penalty you have to pay the 0.5% of the turnover or 1.5 lakh, whichever is lower. So maximum, if I can say, that is 1.5 lakh. Now it is linked with the turnover. So again, another the question arises: what is turnover? And of course, Deepak will definitely cover, because the whole tax audit depend upon the turnover, sales, and gross asset. But unfortunately, the statute did not define anything about this. What is sales? What is turnover? What is gross asset? It's not defined.
And again, one more question is, like I have lots of questions. I have to go faster, because
Yes.
Deepak sir, like within 8 minutes, we have to start Deepak sir session as well. The next question is, do we need to disclose previous year figure in profit and loss account and balance sheet from this year or from the next year onwards? Comparative financials, abhi se
So comparative financial, I think for the company, yes, it is mandatory.
Right, sir.
For the non-corporate SSE, I think I am not. I don't know, because we used to do this practice since beginning. That we give the comparative figure.
We do. We also do.
Yes. So I
But
don't know whether the
Can I answer this? Can I
Yes,
answer
yes,
this
please,
question?
sir. Please, sir.
Good evening, everyone. My name is Deepak Bholusarya. So let me answer this question. First of all, you see, recently the technical guide on financial statements for non-corporate entities as well as LLP has been converted into guidance note, and that guidance note is going to be in effect from financial year 2024-25. So after 1/4/2024, the guidance note shall come into picture. But till now, yes, it is not mandatory. It is optional. But my humble request that you should adopt it. Reason being, there are a couple of reasons for that also. Maybe some of the apprehension which is in the mind of all the chartered accountants is that, sir, it will take too much of time. Sir, fees नहीं आती उतनी जो है, काम ज़्यादा बढ़ गया है. So my answer to all those humbly I answer to those questions. You see, struggle, or I should say hard work, is part and parcel of every chartered accountant's life, right? Second, we should always strive to adopt the best practices which is being adopted in the entire world, right? Because you see, India is a global economy. Today we are discussing Hindenburg, tomorrow we may be discussing something else, right? So it means that there are many stakeholders which are involved in the entire process. And frankly speaking, if you have already invested so much of time in preparation of your company accounts, I believe the same knowledge which you have actually applied in preparation of your company's balance sheet can be applied similarly for the preparation of non-corporate entities balance sheet also. Why? Because you see the same concept which is being followed for Schedule 3, it is being followed for non-corporate entities as well, whether it is current assets, non-current assets, PPE, and you just name it. If you, frankly speaking, if you put two balance sheets side by side of a company as well as of a non-entity, you will find that bearing one or two differences, which though are required also, because in company we have capital, in proprietorship we have different kind of capital, right? In LLP we have contribution as well as capital, partners current account. Bearing those certain changes, right, which are situation specific, everything else is ditto same. Everything else is ditto same. So I believe once you have actually transited to these new forms, I mean these new financial statement, in fact, your life will be much easier. Like Sachin has just said that they have adopted this concept years back. Let me frankly speaking, I'm into practice for the last 24 years. At least for last 16, 17 years, I am following this concept only. All the comparative figures we have been giving for the last many years. Not only that, earlier it used to be Schedule 6, now it is Schedule 3, right? So whatever was the format was for Schedule 6, similarly we had adopted for non-corporate assets. Now it has come into picture, it is now into public domain. So now I believe they have strengthened our practice in that sense that whatever knowledge we were applying till now, it has become part and parcel of our lives. So my humble suggestion is, though it is not mandatory, but you should follow it.
Thank you, sir. Now, next question is, sir, again, it is related to clause 44, Sachin, sir. Again, the person is asking whether it is necessary to reconcile the tax GST turnover with the tax turnover.
I don't think so, because for what I understood from the GST, because I'm not practicing in GST, but GST, if you reconcile, of course, reconciliation is required for the purpose of preparing the annual return of GST also. But if you see here, the requirement is total expenditure versus other expenditures. So you have to classify in two parts: registered entity, other than registered entity. And if you are registered entity, then registered composition, other than registered other entities which are registered but not falling under A, B. So you have to mention it. But if you try to match it that 2 equal to 7, then I think it will be a challenge for you.
Okay, sir. Now moving fast to the next question. And again, next question is related to clause 44. You elaborated very well, sir. But the person is asking that in whether clause 44 of 3CD is mandatory for non-registered auditee in GST.
Yes. So whether you are registered or not, So assuming a lawyer firm having turnover of more than 10 crore, or because for more than 50 lakh is tax rate applicable in case of lawyer firm also, and they are taking services and the tax is applicable on that, then they have to also mention this.
Okay, sir. The next question is laborers bonus paid to laborers. Like in which column we need to show it, sir?
Can we bonus paid to
laborers, sir?
Okay. I think it's there is no specific clause in this respect, because the bonus commission is in respect of employee. If those laborers are a wage earner and not your employee on roll, then it cannot be said that it will be reported in that column. Otherwise, I don't think the specific clause is there in this respect.
Okay, sir. The next question is, what impact of Ind AS on tax audit presentation? Is there any impact related to Ind AS, sir?
So, what I would like to say in this case, because in case of company audit also, nowadays we are saying that you have to mention the figures in nearest to rupees 100. However, in tax audit report, your absolute numbers are required. So, and you are relying on the financial statement which are in number nearest to rupees 100. Then in that case, of course, you have to give this observation in the form 3CA because it is related to company. So, of course, if there is any difference in case of the Ind AS and the applicability of any provision of law, then of course it's to be reported in form 3C or 3CB as well. So, of course, 3CA would be applicable, no 3CB, 3CA would be applicable.
Okay, in the observation.
Yes, in the observation. See, your right is only in the observation. So, whatever you want, you can write there.
Right, sir. Right, sir. Can you explain once again clause 41 of Form 3CD?
Clause 41.
Yes, sir.
Okay. So clause 41 is basically, this is in reference to the demand raised or refund issued. Clause 41, right, sir?
Yes, sir. Clause 41.
Okay. So this is in respect of demand raised or a refund issued. So in this case, you have to report that is there any such type of transaction, please furnish in the given format. Although the form prescribed by the CBDT does not contain any prescribed format, but in the portal, yes, there is a specific format is given. You have to mention this. There are again challenges, because they said if the refund is issued, if the other than it's not related to income tax, other than income tax. So assuming the refund is issued under GST, so when it is to be said that the refund is issued, when the order is passed or when you receive the refund. Similarly, demand raised, assessment is done, but no demand order has been received till now, or till the date of audit. How to report it? So these are the challenges, but of course, it covers very simple thing that if there is any demand or a refund, mention here.
So can we put some observation about our, like as you said, there is a challenges like with the understanding. Can we put some observation in?
Yes, sir. Yes, definitely.
The next question is when to select point proviso where aggregate cash, receipt and payment exceed specified limit in Form 3CD and Clause 8.
So if it is related to, because what, so your question is related to 44AB Clause A, B, C, D, E. So Section 44AB Clause A.
Yes, sir.
Yes, proviso to 44AB Clause A.
44AB Clause A, Proviso Clause A and B, right, sir?
Right, sir.
And you are saying that the percentage prescribed is 5%. So if your transaction or the cash component exceeds 5%, then the threshold the threshold is 1 crore, otherwise 10 crore.
They are talking about Clause 8, sir. Clause 8.
Clause 8. Okay. So in Clause 8, Clause 8 is for you have to report under which clause you are doing this tax audit.
Yes, sir.
Okay. So the Section 44AB Clause A says every person carrying on business having sales turnover of gross receipt exceeds 1 crore rupees. If it exceeds 1 crore rupees, you are in 44AB Clause A. And then Proviso Clause says if the cash component is less than 5%, in case of sales or in case of receipt or including other receipt, then in that case also the turnover would be 10 crore and not 1 crore. So assuming your turnover is more than 10 crore, then of course no need to test 44AB the proviso. If your turnover is more than 1 crore and less than 10 crore, then you need to test the proviso. If you're satisfying those conditions, then of course the no tax auditor is required. Then no Form 3CD is required.
Okay. Otherwise, we need to mention.
I think Sachin, we have misinterpreted the question.
Yes, sir.
I believe why this question has arisen. Let me. If you allow me, let me answer.
Yeah, please, sir.
Guys, you see, if I look at the form which has been prescribed on statute books, right? In that only 6 options, if I'm not wrong, only 6 options are there. 44AB Clause A, Clause B, Clause C, Clause D, Clause E, and then third proviso to 44AB,
yes,
right?
Sir. Yes, sir.
But now the utility, like any other thing, like any other portal you talk about, even let's say Clause 27, if we talk about, it has gone one step ahead, right? Even though no changes has been made in the statute, in the form, notified form, they have gone one step ahead and they have actually introduced 7th option also, which is 44AB-A and proviso to 44AB-A. So I believe this question has been raised in that context, right? So my humble suggestion is that if let's say your turnover is between 1 to 10 crore, as simple as that, it means that proviso has already failed. That is why you are getting your audit conducted. So in fact, the proviso is applicable. But if you look at the law, proviso itself is not telling you to get the books of accounts audited. It is merely saying that the turnover of 1 crore shall increase to 10 crore, frankly speaking.
Yes.
And on top of that, there has been no change in the form. There has been no change in the form. So even if I select 44AB-A, it is still the right, in my opinion, it is still the right selection. But having said that, even if you select proviso or you select clause A itself, it doesn't make any difference at all. This is my humble submission.
Agreed, sir.
Okay. Now we are concluding the session with Sachin sir. Sachin sir, the discussion that you have made, again, it was outstanding, sir. It answered most of the queries that are present in our mind. So thank you, Sachin sir.
Thank you so much, sir. Thank you for giving me this opportunity, and quite interesting to learn from Deepak sir, a learned person, and Jatin sir. Thank you so much, sir.
थैंक यू सर.
आज तो सूरज ने दिए को जो है रोशनी दिखाने, मतलब वो वाली बात होगी कि दिए को जो है रोशनी दिखाई जा रही है, राइट? मैं तो दिया हूँ भाई साहब, दिए रहने दो आप हमें.
नहीं सर, with your wisdom, like every professional is learning a lot, sir. And again, we thanks again to all our speakers that they are sharing their experience, personal experience with all the members, so that we can also like learn and we do not make any mistake while preparing the like tax audit. So with this word, I would like to welcome Deepak sir without wasting other time, and also request Sachin sir to stay in till the end so that we can also entertain all the queries, because I do have so many queries available with me. So we'll sort it out in the end again, sir. Deepak sir, over to you. Thank you.
Thank you, Jatin, and thank you, TAQRB, for inviting me to present this 1 hour presentation on frequently asked question on tax audit under section 44AB. I would like to also acknowledge my co-speaker for the day, Sachin Sinha ji, and other support staff present behind the camera. So I believe, Jatin, I have approximately 1 hour to go.
Sir, to be precise, 53 minutes. And
wow.
Excluding question and answer round. So I request you to please spare somewhere 20 minutes for the question and answer.
I will try to squeeze as much as possible within the given time frame. So 53 minutes have been given to me. So I will be running like a bullet train.
Sure, sir.
Since I have not much of the time, but at the same time, I have to cover it up. Anyway.
Sure, sir. Thank you.
I believe that the webinar 27th of August 2023 has been mistyped by me. So kindly pardon me, and it should be read as 1st of September 2023 rather than 27th of August 2023.
Sure,
so having said that, let me jump on to this presentation. And guys, I'm also a member of TAQRB. So I have seen many tax audit reports who are actually not compliant with guidance note. And before I jump in to my actual presentation, I would like to humbly request all my members, all the chartered accountants, whether young or whether learned veteran members, to kindly read these 5 documents before you attempt or you try to attempt any tax audit under section 44AB. First and foremost is your guidance note of ICI, which is of 2022 edition, as Chitle sir has already explained that this exposure draft for assessment year 2023-24 is soon going to be the actual guidance note in the coming Monday or maybe coming Tuesday, right? And top of that, he has already mentioned that one study has been published by the TAQRB. My humble request that you kindly go through each and every page of that study, and you will find those studies and those observations are actually mind-boggling and eye-openers. So my humble request, please read them. And not only because when you are going to read TAQRB study, you will also read guidance note in one way, because the way that study has been prepared, that observation have been prepared, it is basically referring to the guidance note, what is the requirement and what requirement has not been fulfilled, and what you should do or what precautions you must take while preparing your tax audit report. Then, since there is clause 13 in your tax audit report, then obviously you have to follow ICDS. And we all know that if you are following cash method of accounting, then ICDS are not required to be followed. And I am assuming, because it is a normal and common method of accounting, which is accrual accounting, since mixed kind of accounting is not allowed. So if you are following accrual accounting, yes, you have to follow ICDS. Since you have to follow ICDS, then yes, you have to take help of this technical guide on ICDS. Then already a checklist has been released. It was released 2 years back on tax audit under section 44AB. So these 5 documents, these are must read. So objective of tax audit, we all know that the basic objective of any tax audit is basically to help the tax administration. You are basically assisting as assessing officer. And since already I believe Jatinji, Sachin Bhai would have covered engagement letter and all those aspects. So I am not covering that part. But yes, engagement letter is the must document. It must be there. And not only from your tax audit perspective, because that actually defines your scope of tax audit, but at the same time, from peer review perspective also, because you may be covered by peer review today, maybe tomorrow, right? But that is the basic document you must have. Because since I have not much of time, I could have discussed even case study on the pitfall of not having engagement letters and how these engagement letter can help you. So again, any tax audit, if you want to conduct, you need to have the requisite skill, you need to have the requisite expertise. You must be aware of the provision of the law, because ultimately, ultimately the tax law shall prevail. It may be possible that certain clauses of 3CD are defunct and it is still asking for certain information, but the law has already changed. So those clauses you need not report, because the law will prevail, law shall prevail. TAQRB, I have already, Chitle sir has also referred to the TAQRB, but one point which I would like to highlight before all of you is that in case TAQRB finds any error or mistake or any kind of limitation in your tax audit report, then appropriate action, including reference to disciplinary committee, can also be your case can also be referred to. So that is why it is very important that we conduct our tax audit in accordance with guidance. Or if there are any limitations, let's say maybe like we were discussing how to verify cash payments. So guidance note very well and very clearly says that you need to give a disclaimer. If you don't give any disclaimer, tomorrow you cannot take a shelter that, oh sir, I could not verify a cash payment because requisite information, requisite proof were not available with the SSC. So you need to bring out all those kind of limitations, all those kind of disclaimers in your tax audit report. One more thing, which TAQRB has specifically highlighted, that you see there are, if let's say I'm talking about form number 3CB, there are 2 areas where you can actually give your comments or actually give your observations. What is in one part is in clause 3 and another part is in para 5 of form 3CB, right? Now these 2 paragraphs, 3 and 5, and basically one is related to your true and fair and another one is related to your true and correct. So in these para, only your observation, in the sense, limitations, qualifications, these should be mentioned, not the general notes to your form 3CD. What TAQRB has observed, that the observations are the general observation, the general notes are mentioned there, whereas the qualification or the observation which are in the nature of qualification, they are not mentioned there but are mentioned in a separate attachment. So what TAQRB says, that your general notes which have no qualificatory, which are not of qualificatory nature, which are just basically informational kind of notes, those may be shifted to a separate attachment. Now the question comes in, how do I attach it, right? It's a common question before me. So what you have to do is you basically prepare all those observations in a Word file, right? You can prepare a table. On the left side, you can write the clause number for which you would like to give your notes. And on the right hand side, in the second column, you can mention all your notes, right? And so prepare that kind of Word file, convert it into PDF. Lots of online tools are available. Even if you are using Office 365, it has inbuilt tool to convert your Word file into PDF file. Convert that into PDF file, attach with your tax audit report. I mean, when you are attaching your balance sheet, your profit loss account, your financials, with that you can also attach your observation. But the important aspect is all the qualifications, all the limitations must be in the Form 3CB itself rather than being part of your note. And at the same time, note must be in the attachment, and the limitation and the qualification must be in the Form 3CB itself. Question is whether tax audit is applicable to residents only or even for non-resident. You see, as far as Section 44AB is concerned, it does not discriminate whether an assessee is a resident or whether an assessee is a non-resident. If that non-resident is conducting business in India, right? So it's Indian operation. If the turnover is beyond specified limit, then yes, tax audit is required. I'm not talking about their foreign operation. In case of non-resident, I'm only talking about their Indian operation. But in case there is a resident and there is a branch outside India also, the turnover of that branch also needs to be clubbed to arrive at threshold breach. A very common question, let's say my turnover is 3 crore. Can I avail this enhanced limit of 10 crore? I believe, Jatinji, this question has already been discussed by Sachin Bhai. So yes, I would like to skip it. But just for a recap, there are two conditions in Section 44AB, Clause A, Proviso. One condition is that the total receipt, the cash portion of the total receipt must not breach 5% limit. And at the same time, similar kind of limit is there for cash payments also. So both the condition needs to be satisfied. If either of the condition is breached, then the benefit of 10 crore is not available. Then you have to get your books of accounts audited in case your turnover is exceeding 1 crore. Exception is Section 44AD. So even if earlier this condition was not present in 44AB, so recently by amendment, this condition has also been inserted. Then even a bearer or cross check, right, shall also be considered as cash. Again, question is this enhanced limit available to professionals? We all know that recently Section 44AD has also been amended where there is a condition of 50 lakh as well as 75 lakh. But that is only restricted to Section 44AD. And that again is applicable from next financial year, not this financial year. Since 44AB Clause A is specifically for businesses, that is why this enhanced limit, whether it is 10 crore or because I have received so many questions, is this 75 lakh is available to us for this financial year since all of my payments and receipts are through banking channel only? The answer is no. For professional, the limit is still 50 lakh. We will discuss when this 50 lakh shall apply, will not apply, and so on and so forth. Read with 44AD. Then FAQ on turnover. Jatin, please let me know when I'm left with 15 minutes, right?
Sure,
so when I have reached half.
Don't worry. Again, I'm also checking that you are covering so many questions that has been asked by the audience. So, so again, there is no need no need to panic on this part.
No, I'm not panicking at all. I can speak for another 4 hours if you allow me.
Yes, sir.
I have that much capacity. Don't worry about that.
That's why I told you.
I'm only worried that maybe because of positive time, I may not cover the entire part of my presentation. So that's my worry. Nothing. Anyway, coming back to the topic, let's say there is an example where a sale of ABC Private Limited is 90 lakh, and on top of that, 16.20 lakh GST has been collected. So the total turnover including GST is 106.20 lakh. So a common question is whether 90 lakh should be considered or whether 106.20 lakh should be considered. Now you see, the answer to this question is factual. There is no thumb rule because like Sachin has already explained, that there is no definition of turnover in the entire Section 44AB or even the entire Income Tax Act, right? So in order to arrive at what is turnover, we need to take help of other laws. We need to take help of various judgments, right? There is an entire chapter which is dedicated to turnover in our guidance note. So my humble request is kindly read that chapter. But in crux, guidance note says, right, that the aggregate amount for which sales are effected or services rendered by an enterprise is the term gross turnover, net turnover, or gross sale or net sales are sometimes used to distinguish the sales aggregate before and after deduction of returns and trade discount. So basically, I'm parking the question of GST for one moment. If I'm talking about gross turnover or the net turnover, obviously all the sale return needs to be reduced. All the trade discounts need to be reduced. What about cash discount? In certain situations, cash discount is included. I mean, the impact of cash discount needs to be taken care of, but in most of the cases, cash discount not to be considered while arriving at your sales or turnover. What about, the question is, what about foreign exchange fluctuation? Yes, if the foreign exchange fluctuation is in relation to your sales, yes, impact needs to be taken and needs to be included or excluded as the case may be. Right? Now, if I look at judgment of BK Jhala and Associates, it says turnover and gross receipts mean gross inflow of cash receivable and other consideration. And I think you can read it. But the important part is that these terms should be construed in the commercial sense. How you commercially see the sale, whether it is as 90 lakh or whether it is as 106.20 lakh. So how commercially you look at sale, that's how you derive it, right? It can be 90 lakh, it can be 106.20. And on top of that, there is another case law which says that sale is dependent on the method of accounting being regularly employed by the SSC. Now, we all know there is an inclusive method, there is an exclusive method, right? Even though as per our institute's guidance, exclusive method should be followed. But what if client says, I'm following this method, inclusive method for last many years, right? It is not your duty to tell him that, no boss, you need to change it. It is his prerogative whether he wants to follow it or not. So based on the accounting being followed by your SSC, the turnover needs to be computed. So generally, because again, I have already explained this case law also. Yeah. So if GST is recovered from the customer and it's separate and it is parked in a separate account, I'm talking about exclusive method only. It is parked in a separate account because from that account itself you are making the payment to the government authority. Then GST to be excluded. Otherwise, it needs to be included. And let me tell you, friends, there is always a contention between taxpayer and tax collector that what should be included and what should not be included. But as far as if I look at my guidance note, it very clearly says that if you are following this method of accounting, you are recording your turnover in this way, then definitely GST to be excluded. So in a simple way, in a simple term, I can say that if you are following inclusive method of accounting, yes, GST to be included. If you are following exclusive method, which is the most common form of accounting, which we all have to do, right? Because that then clause 13 will also come into picture, then 145 will also come into picture, clause 14 will come into picture, so and so forth. That's a different story altogether. But when I'm talking about what is to be included in turnover, then it is assessee specific, fact specific. There is no thumb rule whether to be included or whether to be included. But I believe this slide may be followed as a guidance. So there are sometimes we find that in profit and loss count, some old creditors have been written off, right? The question is whether it to be included or whether to be excluded. Sir, not to be included, right? These are not sales. These are not turnover. These are not revenue items, right? Though these may be reportable under section 41, under section 41. But as far as inclusion in turnover is concerned, no, it is not to be included. Now, what about partners' remuneration? What about partners' remuneration? Or what about out-of-pocket expenses which I have recovered from my client? Generally, we chartered accountants, whenever some services are engaged by our clients, let's say my client engages me to form a company, right? To form a company. And I say, okay, sir, my fees is XYZ. And on top of that, whatever are the actual expenses which I am going to incur, I will collect those expenses from you. I will collect those expenses, which is generally called as out-of-pocket expenses. So if I am collecting back to back or a separate account I have created whereby whatever expense I have done is debited and whatever amount I have collected from client is credited to that account, in that case, those collections are not to be considered for turnover. Jatinji, somebody has raised the hand, or is it my hand which has been raised? I don't know.
Sir, this is your hand, sir. This is your hand.
This is my hand only?
Yes, sir. Yes.
Okay, I should. I don't know. How can I do it? Anyway,
It's okay, sir.
let's forget it. Right. So, but at the same time, in the same example, if let's say I tell my client, okay, sir, I will take this consolidated fee, whatever expenses are there, that would be mine. In that case, whatever consolidated amount you are collecting from your client, those should not form part of your turnover. But please appreciate one thing. Let's take an example of bank audit, right? We all do bank audits. So in bank audit, a basic fee along with your tax audit report fee is paid to you. And on top of that, TA and DA are separately reimbursed to you. And those TA on those reimbursements, I also charge GST. Question comes whether it is part of my turnover. You see, as far as accounting is concerned, as far as AS9 is concerned, it is not a turnover. It is merely out-of-pocket expenses. You may be discharging GST, but that is part of GST law. Or maybe I take another example. I have an agent appointed. I supply certain items to him to ultimately supply to customer. Now, GST law says whenever I am sending those goods to my agent or carry forward agent, in that case, I need to raise invoice. I need to charge GST. But the question is it my turnover? Is it my revenue? No. The revenue will arise only when that agent is going to supply those goods to your customer, the ultimate customer. Similarly, if I am supplying goods from one unit to another unit within the same pan, even though GST is being charged, it has to be charged. Is it my revenue? It is not. So again, this table, I have prepared it from guidance note itself. If you look at left side, what to include, and on right hand, what to exclude. So if, let's say you are selling shares and security, one hand, it is part of your stock in trade, and another hand, it is part of your investment. If it is part of your investment, obviously, it is not going to be included as your turnover, but at the same time, it is forming part of a turnover. Yes, to be included. Similarly, discount allowed in the sale invoice itself. Yes, impact thereof has to be taken. Let's say you have issued an invoice of 105, and in that 105 you have given a trade discount of 5 rupees. So ultimately 100 rupees needs to be considered as your revenue. But at the same time, if you pay me, even though the normal credit period is of 50 days, if you pay me within 15 days, I will give you additional discount of 2%. So in that case, it's a financing charge. The impact thereof of that cash discount should not form part of your turnover, right? So again, these examples are from guidance note itself. Partner remuneration. So let's take example that I'm a partner in XYZ firm, right? And from that firm, I'm taking a remuneration of 1.2 crore. The question comes into mind, since 1.2 crore, it is going to be taxed under section 28 as business income. Do I need to get my books of accounts audited? Do I need to get, because you see, as per section 44AA, whether you read section 44AA1 or whether you read section 44AA2, in both the scenarios, because the amount of income you are getting from a firm is way more than the threshold limit. If I read 44AA1, the threshold for professional, the specified professional, what is specified and what is not specified, we will also discuss. But in case of non-specified profession, in case of specified professional, the criteria is 1.5 lakh of turnover in the last 3 financial years, in the last 3 average turnover. If I talk about 44A subsection 2, it talks about there are 2 conditions. Either of them, if it's satisfied, you are required to maintain books of account. 2.5 lakh as income from PGPP, and if I'm not wrong, 25 lakh as turnover. So in both the cases, that limit is breached. So even if I look at, if let's say I'm a non-specified professional, and since my income from profession or business is more than the 2.5 lakh limit, I'm very well required to maintain books of accounts. But the main question is it my turnover? Is it my turnover? If yes, then do I need to get my books of accounts audited? Recently, in 2 cases, it has been answered that answer is no. Specifically in the case of Perizad, Zorabia, Irani, it has been clearly mentioned that interest, salary, bonus, commission, or whatever name, because same language has been deployed in section 28, item number V, right? That if you are receiving this kind of income from a firm, then it is not to be considered as turnover, right? Again, a very common question people ask me, can I claim 44ADA or can I claim 44AD? My dear friend, if it is not a turnover, how can you read 44AD as well as 44ADA? Both the sections are out of the picture. Though it is taxed as PGPP, but at the same time, no benefit of section 44AD is available. No benefit of section 44ADA is available, in my opinion, as far as these incomes from firms are concerned. In another case, what AO did was, since turnover of the assessee was more than 1 crore, so instead of getting those books of accounts audited, he simply applied section 44AD. So court held that unless and until you reject the books of accounts, you cannot simply jump onto 44AD. F&O, again, if you look at para number 5.4 of ICS guidance note and para number 5.10 of the exposure draft, both the paras are parameter, exact language has been deployed in both the paras. That in that case, obviously, negative to be treated as positive, and positive, obviously, it has to be treated as positive. You just submit. You just have to take the profit or loss portion only, right? So let's say, for speculation, let's say I purchased 100 shares at 50 rupee, and by the end of the day, I sold those shares at, let's say, 49 of rupee. So 1 rupee per share is my loss. So 1 into 100 is equal to 100 rupees is my. Jatin ji, आपने हाथ रेज किया?
So इसके बाद can we start the question answer?
Oh, wow. ठीक है. So that's why I asked you कि मेरे को 15 मिनट दे दीजिएगा. बट 1-2 स्लाइड्स और हैं जो मैं चाहूंगा कि मैं एक बार कवर कर लूं, बिकॉज आई थिंक अभी तक मेरे सिर्फ 34 मिनट्स ही हुए हैं.
हाँ सर, बिकॉज क्वेश्चन बहुत सारे हैं, पीपल आर. आई कैन
अंडरस्टैंड. ठीक है, नो प्रॉब्लम. मैं एक बार इसको क्विकली इसको रन थ्रू कर लेता हूं, राइट? सो इन दैट केस, in 100 rupees your loss, even though it's a loss, but for the purpose of turnover, 100 rupees has to be considered. So if 100 loss, and let's say at the same time you have 200 profit, 400 is your profit, 200 is your loss, turnover is your 600, even though net profit is 200 only. Similar is the application of F&O also. So one more very, very interesting paragraph of 44AB guidance note, paragraph 5.21, where the business is covered by section 44BB, BA, BBA, AD, whatever may be the, presumptive section is there. If you are opting for those presumptive schemes, so whatever is the turnover related to those businesses, those needs to be, excluded for the purpose of arriving at threshold for section 44AB. So let's say I have two businesses. In one business, the turnover is 1 crore, and another business, I have a turnover of, let's say, 6 crore. So for 1 crore, I am opting for 44AD. So in that case, only this 6 crore needs to be tested in section 44AB, subsection A. Number of audits, 60, we all know. So if you have, if your firm have more than one partner, more than two partners, obviously in any firm, minimum number of partners needs to be 2. So let's say if you have 5 partners, so 300 audits in aggregate of all the partners can be done. So let's say maybe one partner can sign 70 and another partner can sign 50. It is not as if, since there is an aggregate limit, so one partner can 60 at the same time another partner can sign 70. No, it needs to be in aggregate. The number of audit needs to be limited, right? And in my humble suggestion is that if being a partner, I am allowing another partner to sign or use my limits, internal documentation should be there that I am allowing you to use my limit, so that tomorrow no disputes are there. It may be possible that I am a partner in some other firm also. I am a partner in some other firm also. So it's better that you take a written confirmation of another partner if you are using the limit of another partner. That is my humble suggestion. Statutory auditor can be appointed as tax auditor, a tax auditor, a statutory auditor, a TP auditor. All these auditors can be the one and same and can be separate also. UDN, yes, please generate your UDN within 60 days, and within 60 days it must be updated on the portal also. It must be updated on the portal also. Otherwise, your submission shall become invalid. Tax audit report, yes, we can revise prior to the end of the financial year. Already rule has been prescribed that if there is change in section 4 because of section 40 or 43B, yes, you can file your tax audit report. Penalty, already we have discussed. So profession has not been defined. We have to take help of various judgments. That what is profession? Every judgment is only talking about intellectual knowledge, and intellectual knowledge. That's it. Then, if I look at Rule 6F, read with section 44AA1. In my humble opinion, only 9 professions have been specified as specified profession. Though our guidance note says that these are profession, but guidance note very clearly said these are profession under section 44AA. It doesn't specify whether these are under 44A1 or 44A2. Right? So the only bone of contention is whether it is a specified profession or not specified profession. The question comes to our mind is, what difference does it make? It does. Because if it is not a specified profession, 44ADA is not available. But if it is a specified profession, then 44ADA is available. And at the same time, let me jump to, one more question. A very common question which is being asked by a lot of members. Can I claim 44AD and ADA at the same time? Answer is no. Let's take an example of chartered accountant. I'm into practice, but at the same time, since now IC has allowed me to do F&O, let's say I'm also doing F&O for my own account, right? So on the one hand, I have a profession, which is a specified profession. And on another hand, I have a business. The question is, can I take both 44AD and 44ADA? No. 44AD is out of picture. For business, I can't take 44AD. Why? Because I am a specified professional. Kindly read section 44AD subsection 6. It is specifically exclude the persons who are carrying on profession which are specified in section 44AA subsection 1. That is why specified professions are very important. And similarly, 44AD is available only to those professions which are specified in 44AA1. So in crux, If you are engaged in specified profession, my dear friends, 44AD and 44AD both are not available. Only 44AD is available. Another question. I am not into specified profession. Can I claim 44AD? Yes, but only for business. Not for your professional income. Please mind this fine difference. 44AD only talks about business, not about profession, right? So even though you are eligible for 44AD if you are not engaged in specified profession, but at the same time, 44AD is available only and only for business. So let's say I'm surveyor. So I'm into survey profession. At the same time, I'm doing F&O. For survey profession, 44ADA is not available. But yes, for F&O business, 44AD is available. But in the case of chartered accountant, 44AD is out. 44ADA is in, provided turnover is up to 50 lakh. So one more chart, you can have a look at that. I've tried to consolidate all the provision of 44AD, 44AE within one chart itself. Since the paucity of time, I can't discuss it. This is 44AE. At the same time, this is for profession. And only in two cases, audit is required. One, your turnover is more than 50 lakh. And second, your turnover is less than 50 lakh. Your total income is more than threshold limit. And at the same time, you are into specified profession. Then in that case, and you are not opting for 44ADA, yes, then audit is required. Other than that, no audit is required. So I believe with this, I can end my session, Jatin, since you have already raised the bell.
Yes, sir.
So
Sir,
let's take question and answers.
one request, can you please go back to the pages where you consolidated the sections so that our audience can take the screenshot?
Sure. Why not?
Very helpful for our audience.
Yes, why not?
So all the audience are requested to please take the screenshot. It is.
I will also be sharing my PPT with you, Jatin. If I don't know how will you share it with our participant. Otherwise, you could have also shared this PPT with our participants also.
So for that, we need to discuss with the TAQRB.
Okay. No problem. In that case, our participants can take screenshot of it.
Sir, you can share your PPT on our official website, official mail ID, taqrb@ici.in.
So I will share my PPT. So I will share my PPT with you also.
So we will upload it on our official website. So
you guys will upload. I can't upload
here.
it. You guys will upload.
Okay.
I can share it with you.
Yes, sir. Okay.
And again, this request is again for Sachin sir as well. Please, you also share the PPT. Now, sir, quickly we are coming on the question answer round. Welcome, Sachin sir, again. The question is, the partnership is having turnover of 85 lakh, showing the loss of 2.45 lakh. Right, sir? Then he is filing ITR 5 with maintaining books of account. Will it be liable for tax audit?
No.
No, sir. Okay.
No.
Next.
Because you see, let me give me the reason also.
Okay, sir.
First of all, 44AD is not applicable.
Right.
Because already your books are in loss. And second, 44AB is also not applicable because your turnover is less than 1 crore. And I am assuming it is not in profession. I am assuming.
Okay.
If it is in profession, then situation will change. Then
Right.
44AD subclause D shall apply.
Right. Right. Now, this is regarding clause 16D of tax audit report. Do we need to show FD interest?
16D. Sachin, can you help me with the clause 16D? I don't remember any interest on 16. FD interest on 16 clauses.
Sachin sir, please unmute.
Unmute. Sachin, unmute, please.
So this is regarding the point which says amount not credited to the profit and loss account, and D is any other item of income.
Okay. I really don't know why this question has been raised.
See, these are the general queries again.
Again, let me answer on that part. There is another issue which is prevalent in our tax fraternity, I mean our CA fraternity, is in respect to contingent liability. Right? What a lot of people are doing is they are reporting contingent liability in clause number 16, right? If you read guidance note, it clearly says that only those items which are within the scope of section 28. Please appreciate, we are talking about section 28, and section 28 is for business income. Unless and until that contingent liability has actually become your income, and that income has not been charged to your profit loss account, only then it needs to be reported. Only then it needs to be reported. You see, general contingent liability, we all disclose because a lot many regulations are there. Just because it's a contingent liability doesn't mean that it needs to be reported in 16. And that is why people are receiving a lot of notices for addition of contingent liability. So kindly avoid giving these kind of income. You see, you first need to understand whether this item which you are going to report, whether it is taxable under section 28 or not. If yes, then you need to test whether it is reported in profit loss account or not. If both the conditions are satisfied, only then, in my humble opinion, you need to report it. Sachin, anything you would like to add here?
Sir, yes. I think why they have raised this question, because the point says any amount not credited to the profit and loss account, and subsequently says
I understand that. That's why
any other item of income. So just to clarify that here it is only related to the income which is related to your business. And if any income which is not related to your business, assuming you have some personal interest account, personal interest income, or personal house property income, it is not to be reported here as any other income.
That's why I said, na Sachin.
Yes, sir.
Because guidance note very clearly said this item of income first of all needs to be covered by section 28.
Great.
Unless and until it is within the four corners of section 28, there is no reporting out altogether. Or maybe let's take another example. There is a clause on 43CA also. Right? In 43CA, you also need to report transfer of assets, right? So a few days back, somebody asked me that I have gifted such and such property to my son. Do I need to report in 43CA? So I say, sir, please read section 43CA. It says only those land and building which are not capital asset, meaning thereby only those land and building which are part of your stock in trade. If you are transferring those land and building, only then 43CA will come into picture. Since 43CA is not into picture, there is no reporting at all. Just because it is an income, it needs to be adjusted in computation of income. It doesn't mean that you need to report it. Say, for example, provision for doubtful debt. Where do I need to disclose it in Form 3CD? Nowhere. Disallowance of gratuity is there. What about allowance of gratuity? It is not there. I can't help. The government needs to amend the Form 3CD if these points needs to be taken care of. Over to you, Jatin.
Sir, next question. It is related to the NOC from the previous auditor. Is it compulsory? And again, somebody also asked what action he can take against the previous auditor who hasn't take the.
Well, we don't want to promote anonymity here, but yes, I can say like any other audit, here also you need to obtain NOC from the previous auditor. Not only NOC, you also need to make sure that any undisputed, I am again using the word undisputed fee is not pending to be paid. So before you start your audit, before you accept the assignment, please make sure that you write to the previous auditor, and at the same time, make sure that the fee any undisputed fee has been paid to the auditor, the outgoing auditor.
Right, sir. So again, question is specific, but again, I would like to request you, please answer it in the general way. So the question is, the client has given detail of 3 bank accounts. And there may be cases where client is holding somewhere about 10 accounts, might be. So again, the client has given information about the 3 bank accounts only, right? So in this case, how the auditor will verify that the information given by the client is correct or not? And this is related
to take it up, then I will add to it.
Okay. So if you remember, sir, in my one of the slide I have mentioned that the management representation letter is required. If it's a bank account transaction, of course it might be routed through some other account also. But assuming it's a transaction which is not routed through any other account, and it can be said that it's absolutely isolated account, although belongs to the business of the SSC, but not reported, you are not able to dig out, then MRL is applicable in this case. But I mentioned in one of the slides, sir. Yes, sir.
But at the same time, On top of MRL, engagement letter is also very important. In engagement letter, you have to get your client written that they will provide you access to each and everything. And if they don't provide you access, then it's a limitation to your audit. It's a limitation to your scope. And then in that case, you need to highlight that limitation to your scope in your audit report. Again, guidance note is very clear on this.
Right, sir. That is right. The next question is if there is any adjustment under section 145A, it is required for the tax audit purpose. Then there might not be any adjustment in the financial statement. Is it true?
Sorry, please repeat.
If there is any adjustment under section 145A is required for the tax audit purposes, then there will be no adjustment is required in the financial statements.
Please appreciate ICDS are not accounting standards. ICDS, I mean, when I'm talking about 145A, automatically clause 14 as well as clause number 13 will also come into picture. Only thing is that 145A is only in respect of ICDS 4, if I'm not wrong, right? So, as far as ICDS 4 is concerned, yes, there is a duplicacy of reporting also in clause number 13 as well as clause number 14. So, what we generally do is, we report all the adjustment in clause 14 and in clause 13, we give a reference to clause 14 also, the cross-referencing. Having said that, coming back to the main question, first of all, ICDS is not a accounting standard. So whatever adjustment you need to report in the computation itself. You see, if you have already adjusted your books of accounts, then where is the question of 145A? Where is the question of adjustment? There is no adjustment at all. And one more thing, since time was not much, I would like to highlight very, very, very crucial point. You see, in all our audit reports, we write all the accounting standards have been followed. I am talking about Form 3CB. But please tell me how many accounting standards we actually are following. There is a publication of institute which is called as, if I'm not wrong, framework of accounting standard. In framework of accounting standard, there are 4 levels: 1, 2, 3, 4. And according to the turnover, according to the borrowing, the level of accounting standard you have to follow. I'm talking about other than companies, right? Non-corporate SSA I'm talking about. If let's say I talk about AS 10, are we following it? No. In majority of the cases, I will say a big no. All the assesses are basically providing depreciation in accordance with the income tax only. But that accounting policy of providing depreciation in the books of accounts in accordance with section 32 is not in accordance with your accounting standard. So you need to qualify your report. Second, many accounting standards I can quote. Are we following AS 22? Are we following AS 19? Are we following AS 18? There are so many accounting standards which we actually are not following at all. So please stop writing that all the accounting standards have been followed. Either you write that, give a qualification. I can share the qualification also, in what sense, what kind of qualification you have to give, because institute requires that whenever I'm giving a qualification, then again quantum has to be given. So that again itself is a tricky area, because we really don't know what is the impact on our books of accounts if you're going to follow AS 10. So again, that is one area which we need to closely look at, because the way reports are being shared with TAQRB, and these matters are also being taken up. And tomorrow it may also be possible if, let's say, a reviewer may see that, okay, even though I'm reviewing a tax audit report, but at the same time in financials, certain accounting standards have also not been followed. In that case may also be referred to accounting review board also. So my humble suggestion is that please see that all the accounting standards have been followed. If not, give a proper qualification on that.
Okay, sir. The second last question, sir. Somebody has, some of the client has received alimony of somewhere about 2 crore rupees. So whether it will be considered in the turnover or not?
Not at all. Sachin ji, aap bataiye. Not at all.
Whether it's a business of the SSC.
Yes. Not at all. Though it may be taxable. Please appreciate, though it is not a capital, it may not be a capital receipt, it may be taxable. It may be, I'm using the word maybe, because we don't know all the facts. but it is not a turnover. It's not a business at all.
Right, sir.
It's not a profession at all.
So we'll consider it as a gift.
No, again, I'm saying now, whether it is a gift, whether it's a capital asset, whether it's a capital receipt, maybe. So it all depends on the facts.
Right, sir. The last question for the day.
Because
sir.
you see, Jatinji, nobody gives you alimony out of love and affection.
It arises when there is no love and affection.
Yes.
Rightly said, sir. Rightly said. The last question is, sir, like in case of real estate, whether the inventory has to be reported project-wise or simply the consolidated figure.
Sachin ji, आप बताइए इस पे आंसर. You are talking about clause number 40 or which clause you are talking about?
No clause has not been mentioned, sir.
So I think this is regarding the inventory valuation.
I think maybe in the trading part they are talking about, right?
Yes. So it says inventory, so it might be a builder or developer. So of course it should be inventory wise, because it's a separate inventory, and of course you can take the cost of each inventory separately.
But at the same time, I believe, Sachin ji, instead of maybe project we can take, but you see, how do you identify which is a principal asset, principal item? I may say housing is my principal asset, or low income housing is my principal item. Commercial is not my principal item. So it again, there cannot be any generalized answer to that. It will depend on the facts of the case. So I'm not going to report, okay, house number 1, house number 2, flat number 1, flat number 2, flat number. No, not at all. You need to group it. Only and accordingly you need to report.
Okay.
So there cannot be any hard and fast rule on this for this answer.
If there is any issue related to this, then they can also write in the observation part as well. So
Yes.
What is the basis of representation?
Yes,
of this?
you can.
Okay. With these words, sir, as per my moderator experience, again, the maximum question has already been answered by you, because I was getting lots of questions. And again, what happened, I was getting question and you were about to answer. You and Sachin sir both are answering all the questions which are general in the mind of the chartered accountants. So again, this session was very useful for each chartered accountant. You answered very small to higher level of query which is in the mind of the chartered accountant. So on behalf of TAQRB, I am very much thankful to you, sir, for your words of wisdom.
Thank you.
Thank you so much, sir. Thank you.
Now,
only shortage was of time.
Yes, sir. Again, the information you have very vast. But again, the time we have is again limited. And again, with TAQRB, again, we'll request the chairman, sir, so invite you again so that all the questions and all your experience can be shared with the...
Sachin ji and Jatin ji, we can do one thing. I really don't know how TAQRB is placed on that. We can conduct another session only on question and answer.
Yes, sir.
No delivery by any speaker. Just take up the question, take up the queries of our members, and then we can try to answer it.
Yes, can we do it such a way, we'll ask the member to send the question in advance, and in that particular session we'll answer, because we want all the questions.
Very good. We can do that.
So I'll request.
Thank you very much, sir.
And again,
Sir, we will try to arrange a next session on question answer. So Dharmendra ji will coordinate with Deepak sir and Sachin sir.
Okay, sir.
Over to you, sir.
So, okay. For the information of our participant, you may view our previous session at our official website taqrb.ici.org at Knowledge Sharing tab, where you can find all our PPTs and videos of the session. And for this session PPT, Deepak sir will share with us, and then we will upload it on our website. Further, we have released a publication on, as you are seeing on our website, quick referencer for tax audit under section 44AB of the Income Tax Act. You can download the soft copy from our website and also order a hard copy of this publication at CDS portal of ICI. Thank you very much, sir. Over to you, Sachin sir.
Can I say something?
Yes, sir. Deepak, sir, please.
So, those members who are residing in Delhi or near Delhi, tomorrow, myself, Sachin, and another fellow colleague of ours, we will be having one full day session only on tax audit. So, if let's say some query has left to be answered, I will request those members to kindly visit there, come there, meet us, and we will try to answer those queries there itself. Tomorrow, I believe it is in a Rose Hotel.
Rose Hotel, Nehru Place. Yes, sir.
Right. So it will start at 10 a.m. It's a 6-hour session. 2 hours divided between me, Sachin, and
Pankaj.
Ji? Pankaj. Yeah, Pankaj Sarawgi ji. Right.
Rightly said, sir. So, this word, I would like to thank Sachin ji and Deepak ji and team TAQRB and CA Raj Chawla ji, Chairman TAQRB, Chitla sir, Vice Chairman sir in absentia, for conducting this session. With these words, thank you and keep learning and keep working hard. Jai Hind, Jai ICAI.
Thank you, sir. Thank you.